Are you in the market for a luxury home? By luxury, I mean sales price points of homes greater than $1 million. Now, I've been diving into the statistics of what is going on in the Phoenix metro area here in Arizona, and it is like mind-boggling, which is what led me to talk about luxury home financing. But before I get the financing, just in the Phoenix metro area, we are seeing with price points greater than $1 million, all the way up to $3 million increase in sales. So I'm sharing this with you because when we talk about luxury financing or financing of higher price point loans, the lending component changes. And I want to share with you how it changes, because if you are looking in the luxury market and maybe you've never taken out a jumbo loan or purchased a sales price greater than $1 million, here's what you need to know. First and foremost, realize that the majority of loans that are originated in our country kind of fall into buckets. So let's talk through those. Those would be government-backed loans such as USDA, FHA, or VA. Now, VA is kind of the outlier because with a VA home loan, even though it's backed by the government, you can borrow using a jumbo financing strategy. A lot of people don't realize that. And the cool thing about VA is that you can put no money down, and if you have a service-connected disability, then their funding fee gets waived. So we just closed a loan for a buyer who was purchasing a $1.9 million purchase price. He used his VA financing. He has a service-connected disability, and he chose to put zero down. Now, he had the money to put money down if he wanted to, but with VA, he didn't have to. So he did 100% financing with a VA jumbo loan. So just know, VA does have jumbo financing out there, and a lot of people don't realize it. So if you've served in the military, the National Guard, or the reserves, be sure that you're exploring that VA jumbo loan financing option. All right, now as we move into what we consider kind of conventional financing, remember that the majority of conventional financing is delivered to Fannie Mae and Freddie Mac, and they will set every year what we call a conforming loan limit. So currently that conforming loan limit is $806,500. Now that loan limit changes every year at the beginning of the year for the following 12 months. It could go up, it could go down. It generally goes up because the cost of housing has gone up. But right now that number is $806,500. This is important because any loan amount that exceeds that conforming loan limit using a conventional loan, everything changes from a documentation standpoint, from a credit score standpoint, from a reserve standpoint. What does reserves mean? That means after your down payment and closing cost, how much money do you have left in your assets that can be counted towards reserves? Some jumbo financing wants to see that you have 3 months of reserves, 6 months of reserves. And what's counted in reserves is going to be your payment on the new house together with payments on any other real estate that you own. When you get into the jumbo space, every single program is going to have a different set of guidelines. Every lender has a different set of guidelines. The debt-to-income ratio can vary widely. Some programs, maybe they have the best interest rate on a jumbo loan, they could cap at a 36% debt-to-income ratio in order to get that rate. We see a lot more of the influence of what's actually going on in the loan drive interest rate and terms. So again, when we get into that jumbo financing category that generally pertains to those that are purchasing luxury financing and aren't doing a ton of money down. So again, that loan amount would exceed that $806,500 on the loan limit today. Then it's just a different approach. So reserves, credit score is a big deal. Debt-to-income ratio, as I mentioned, is a big deal. Documentation, get ready. Because if you've gone through the home loan process before on a conforming conventional loan, and now you're in the jumbo space, on the conforming conventional loan, maybe you just had to supply a W-2 and some bank statements and some pay stubs. When you get into the jumbo space, it's not always like that. There are some streamlined jumbo financing documentation loans out there. But again, I'd say plan for more documentation. 2 years of tax returns, W-2s. It's all pages of your tax returns. If you're getting any K-1 income, you have a Schedule C, you own any other properties, Schedule E, it's all pages of the federal tax return. Bank on 2 years. The lender may only need to have 1 year depending on the program that you're fitting into. And don't dismiss that there are, because of these additional kind of criteria, so because of the more restrictive debt to income ratio, because of the tighter credit score ratios, sometimes it makes sense to not do a jumbo loan and carve out that loan that you would do what we call a combo loan. So we would set the first mortgage in the conforming loan limit range. We would close simultaneously with a second mortgage. So now we're doing combo financing. And we tend to use that strategy because that jumbo loan, based on the overall criteria with debt ratio, credit score, reserves, etc., it's just not fitting in the jumbo category. So we can kind of break up what is needed for the loan amount to be financed and put that into a combo strategy. And sometimes that works. So overall, when you're in the luxury home market and you decide you're going to use financing, it's just a different process. We do a ton of jumbo financing, and there are different programs out there. The terms are different. Doesn't adjustable rate mortgage make sense? I mean, it's a whole different animal. So be sure that you're working with a lender that understands jumbo strategy and financing options that can best fit your scenario. That is absolutely the key. And keep in mind, submitting the documentation early in the process is going to set you up for success. It drives me crazy that there are lenders out that say, well, hey, you can just get me your documentation once you're under contract. Trust me, the devil's in the details. This is where loans get off track. So it is better to provide all of the documentation up front, go through the pre-qualification or pre-approval process, complete the application with the lender, have your credit pulled, provide the documentation. They can talk to you about what your goals are, what your specific scenario is, and then come back with a financing strategy that helps you achieve what your goals are, not just what you see online, because what we see online is just a point in time. It's a picture with assumptions, but not everybody fits in that assumption bracket. So if you have questions about this, don't hesitate to reach out. Kelly Zitlow Group Advisor is here to just have an initial conversation and get you on the right path to buy that luxury home. 480-725-0150. You can call that number or text it.